Now, as we're talking about our business, we realize we might actually need some other assets, right? It doesn't make sense necessarily to put 200 candy bars in your pockets or in your backpack and take them on campus to sell. So instead, we're going to need a candy cart. All right, so a candy cart is going to be a long-term asset. Typically, we think about these as property, plant, and equipment. So this might be equipment that we have that we're going to use, and we're going to use over a long period of time. Right, this gets into the distinction of whether we're going to expense certain costs as we incur them, or whether we're going to expense them over time and do what's called depreciation. Right, you've all seen depreciation in the past. What we're thinking about with depreciation is basically taking some economic cost in a period attributable to using a long-lived asset. So in this case, we're going to assume our candy cart costs us $2,000 and it's useful for 5 years. So we're going to have a number of additions that we need to make to our both balance sheet and income statement to accommodate this fact that we have this long-term asset now. So let's start on the asset side, and we're going to go ahead and make some room for our long-term asset. And we need a decent amount of room here because we have a couple different lines we have to account for. The first is going to be our gross PP&E, property, plant, and equipment. We're also going to allow a line for accumulated depreciation, which we'll talk about in a minute, as well as our net PP&E. So let's copy some of our forms over just so we can keep our formatting nice. And I'll copy some formatting from here as well. That way we keep a nice consistent look throughout our spreadsheet. All right, with that copied over, we can now talk about what these things are. Well, gross PP&E, that's essentially the total cost of whatever we purchased. So in this case, we can set that exactly equal to the candy cart cost. We're going to assume we buy that at time 0. So we go ahead and hit enter. And at the beginning, there is no depreciation yet. Nothing has happened. So our depreciation initially is 0. And our net PP&E then, or the book value of that asset, is the gross PP&E plus any accumulated depreciation. And accumulated depreciation we're going to show as a contra asset, so it's going to be a negative asset, and that's why I'm using that plus. Now, as we move forward with this asset, now we got to think about how the depreciation accrues. And to do that, I'm actually going to first zoom out a little bit so we have a little bit more room to work. And now come up here, and we're going to actually have to add a couple more lines in our income statement, because we want to think about what our depreciation expense is for period 1 and how that then ties back to our accumulated depreciation. So we're going to make a couple extra lines here. So we're going to make room. First, we're going to put in a gross profit line. This is a common subtotal that you see in financial models. And it's just going to be our sales minus our costs. So we get that plugged in. Our next line then is our depreciation. So our depreciation expense is whatever amount of that asset we used up during the year. So in this case, the useful life of this asset is 5 years, or 5 periods. So the amount we're going to use then is the initial cost divided by 5. This is the simplest way to do depreciation. It's called the straight line method. We're assuming that essentially 20% of that asset degrades each year. So we're going to use it up at the end of 5 years. And so in this first year, we're using $400 of that value of that asset. Let's go ahead and just keep our formatting consistent as we can. So again, I'll make this all look nice by using my Alt-EST. I actually don't know the shortcut for bottom borders, so I'm going to go ahead and click it. And now we see our depreciation. That's a negative, so let's account for that in net income, where we can do our gross profit minus our depreciation. And now we've updated our net income. All right, so net income's up to date. Let's come down here and now update our accumulated depreciation. Since it's a balance sheet account, we're always doing the previous period and then plus or minus any changes. Because this is a contra asset, we're going to subtract off the depreciation amount. So it shows as negative 400. Gross PP&E, it's going to be equal to the prior period amount, plus any additions or subtractions from PP&E. Typically, we call those CapEx, capital expenditures, We don't have any other purchases this period in period 1. We bought the cart in period 0 at the beginning when we started our business, so we don't have any extra purchases, so we just carry it forward from last period. We can then move over our calculation of net PP&E, and we see 1,600 is our total value. So we've updated that part of our model. However, we haven't updated our cash account yet. So let's go ahead and look at how we do that. Just as before, let me undo that. We need to come in here, and we have to update to subtract off all of our assets. So the asset we haven't subtracted yet is going to be that net PP&E. So we're going to subtract off net PP&E, update our cash account that way. And now we're going to check, does everything balance? See our cash there. Now our current assets need to equal the sum of what's above it. And we're going to make sure everything adds up here in just a second. Now visually we can see everything is adding up. Those 3 are adding up. These 3 are adding up as well. Our balance sheet is balancing and we look okay. I say we look okay and that everything is balancing. We've gotten our fixed asset built into our model. Unfortunately, we do see this big cash issue. We didn't have our $2,000 to basically buy that cart at the beginning. So in the next video, we'll talk about how we're going to fix that and incorporate that into the financial statement.